Hi everyone. Hello everyone. You know what? It's just not the same anymore. I don't even know who I am anymore. It's time to go back to your roots. Holy flippity flip flop flappin' smokes everyone. The smoke is back and it's holier than ever. So I'm sure you know that the housing market has been running red hot lately. And this is leading many experts to say that we are once again in a dangerous housing market bubble, just like in 2007 and in 2008. But despite these warnings from the so-called experts and all the predictions saying that a housing market crash is only moments away, the housing market keeps defying all the odds and it keeps rising every month, leading many people to think they'll never be able to own a home. But while everything seems fine and dandy right now and everything looks like good times and rock and roll, underneath the surface a storm is brewing. And this storm is going to lead to one of the biggest housing crises in US history. In this video, I'm going to go over exactly how this crazy housing market was created, how far we are away from the peak, and when this housing market madness will finally end so you can get that home or investment property that you've always wanted for a discount. Okay everyone, let's not waste any time, let's get straight into it. Have a look at this alarming warning everyone. Mortgage services brace for fallout as the pandemic bailouts come to an end. And this is exactly how this crazy housing market bubble was formed, because many people that would have normally gone into foreclosure before the pandemic, they haven't had to pay their mortgage for up to a year and a half. And this is one of the biggest housing market bailouts in history, and because they kept kicking the can down the road, this is why we haven't had a crazy housing market crash like many people have predicted. But unfortunately, all good things do eventually come to the end, and we are about to see an end come to this forbearance program. Listen to this everyone. An estimated 7.25 million borrowers have participated in forbearance programs at one point or another through the coronavirus pandemic, representing 14% of all homeowners with mortgages according to Black Knight. So that is absolutely crazy. Over 7 million people participated in this program, and it's because of this program and the Federal Reserve dropping interest rates to zero and the average mortgage rate going from around 3.5% and it hit a low of around 2.69%. This just caused more fuel to be put on the fire to create this crazy housing market where there was no supply coming onto the market, and then there was a huge amount of demand from this cheap credit. But unfortunately, the Federal Reserve and the government, with dropping interest rates to zero, with printing money like crazy, and with using all these stimulus checks, they've used all their ammo now. So what are they going to be able to do during the next financial crisis? And listen to this everyone. About 72% of all participants have since left their plans, while 28% or just more than 2 million remain in active forbearance. So while it is good news that many people are ending their forbearance programs, there still is 2 million people in forbearance, and we don't know exactly how many properties those 2 million people own, because it may just not be single homeowners. You may have investors that may be in forbearance to own multiple investment or multiple multi-family homes. And the third point here everyone, of the 146,000 plans reviewed just this week, 44 homeowners left forbearance, while the plans of 102,000 were extended. So again, even though some people are leaving forbearance, this week, a third of homeowners still needed this program. So it shows that many people aren't out of the woods yet. They're still in the middle of the jungle. It says here, the nation's mortgage services are gearing up for the biggest wave of delinquent loans since the subprime mortgage crisis, but this time they say they are ready. Well, of course, they're going to say this, everyone. Just like in 2007, they said, don't worry, nothing to fear about all these bad loans. Everything's good. Everything's all gravy. Well, things don't seem very good to me. There are still many people in forbearance. The Federal Reserve is having to buy up all the mortgage-backed securities because it seems like many investors don't want to buy these securities. And listen to this, everyone. It says here, the first wave of borrowers to enter the government's coronavirus mortgage bailout program are entering their last quarter for relief, which means that come September, they'll either have to start paying, sell their home, or go into foreclosure. So it looks like we've just seen the last kick of the can down the road. We all know that the government loves to kick the can down the road, but unfortunately, at some time, they have to face the music. And, people, they can't just not pay their rent or mortgages forever. So at the end of this year, we're going to see many people, they're going to have to be talking, going through a lot of discussions with their mortgage servicer. But some people, unfortunately, will have to sell their homes. But good news for them, they will hopefully be selling their home for a profit in this good housing market. But if they try to drag it out to maybe late next year, then who knows what the housing market will be like then. The Federal Reserve and the government have been saying we've got such a great economy, the economy is so strong. While we've got interest rates at zero, the Federal Reserve is, printing 120 billion, or they're buying 120 billion of mortgage-backed securities and US treasuries every month. They've been given stimulus checks out like crazy, and they've been paying people not to work. So we'll see how strong the economy really is once all this stimulus and once all this money printing is taken away. And this is crazy. Listen to this, everyone. Black Knight estimates that 575,000 plans will expire in September and the beginning of October, meaning mortgage services will be facing the daunting task of dealing with about 15,000 troubled loans per day. And unfortunately, what it means this winter in the US, in the housing market, they're going to lead to is an even bigger housing crisis. We're already seeing a crazy housing crisis in California and in New York, and it's starting to get to more and more cities. But with, the evictions coming up, and with, people possibly entering in foreclosure, unfortunately, the homeless crisis is going to get even worse. While an improving economy should help more borrowers to become current again on their payments, no one denies there will be foreclosures in the fall and winter, and as some troubled borrowers simply have no other recourse. Eviction deadline looms for millions of tenants with surging rent debt. Robust federal aid for renters was supposed to help prevent a flood of evictions when the moratorium ends, but the government isn't moving fast enough, they say. Now, what I'm going to get into right now is a story of Cindy and her scenario with her problem with her current rental situation, but unfortunately, there are millions just like Cindy that are in the same situation. After a year of being unemployed and serving as a primary caretaker for her aging father, Cindy was relieved when she got a job this spring as a contractor for a major bank. She'll make $85,000 a year, more than enough to pay her $1,200 a month rent in Charlotte, North Carolina, but her lease has expired and her landlord wants her out now. Geez, so this is a tough situation. Even though she's making, good money, and many people may get a better job, simply, it's with the cost of inflation, with inflation going up and the cost of living skyrocketing and the debt mounting up, even if you got a good job, it's hard to, fork out $10,000 to $15,000 to pay this huge rent bill. So Cindy, who asked to be identified only by her first name to avoid jeopardizing her new job, is one of an estimated 10 million renters coming out of the pandemic saddled with $1,000 of rent debt. The eviction moratorium kept them in their homes for the worst of the crisis, but as the expiration date looms, the unpaid sum balloons. Unable to find a new apartment because of a bad standing with her current landlord, or to immediately pay the $16,000 that's past due, Cindy is now caught in limbo, waiting for the government's promised rent aid to materialize before the federal moratorium officially ends this month on July 31st. Wow, so this is definitely a tough situation. $16,000, and this is just one person. Like they said, there's up to 10 million people that are possibly going to be in this same situation, and they keep extending it another month. But really, it's just making the debt problem get even higher, and it's not really fixing some of the fundamental issues. And this is also happening at a time when unemployment is going up and inflation is going up, just making the situation even worse. But don't go anywhere. I'm going to get into how this is all going to affect the housing market, and the bottom line, how you and I can prepare in a moment. So it says here, Congress set aside tens of billions of dollars in the last two relief packages to help renters, authorizing nearly $47 billion, all told in emergency rental assistance. Yet getting the dollars out of the door has been another story. Across the country, the funds have been stymied by a lack of awareness among renters, obstacles with landlords, and red tape at the state and local levels. So again, they've tried to help out here. They've tried the bailouts with this $47 billion, but unfortunately, I don't think it's going to be enough, and the money isn't getting to the people quick enough. Listen to this, everyone. This sounds pretty dire. I've been doing disasters for 30 years, and this one is the first one that's affected every single state, every territory, and every tribal government simultaneously, Gar says. And I completely agree. I don't know what housing crisis we've seen where everybody's been affected en masse like this across the homeowners market and the rental market at the same time. And this is what's going to happen, everyone. With the moratorium ending in a month and the expectation is this is the last extension, I just don't see how they're going to be able to distribute that much money that quickly. Along with a potential tsunami of homelessness, Majid says she fears there will also be a massive wave of bankruptcies next year. Well, everyone, so this is pretty devastating here. Not only there's going to be homelessness, but she's warning that there's going to be a huge amount of bankruptcies. Because look at all these small businesses that have been struggling, all these people that have been struggling to pay their mortgages, struggling to pay their rent. They may just look at bankruptcy as an option. And also, once all this stimulus gets taken away, I think the US will enter into a double dip recession possibly next year. So you know what this means, everyone. With the forbearance coming to an end, with the eviction moratorium coming to an end, with people like in Cindy's situation, this means there's going to be a huge amount of supply added onto the housing market for people possibly going in foreclosure, or they may even decide themselves, to sell to make some profit in this red hot housing market. And also you may see landlords, they've been struggling because they can't collect rent from their tenants, so they just may give up. You're seeing a lot of landlords just getting fed up with all the situation that's happening with not being able to evict their tenants. And again, on the same thing on the tenant side, they can't afford to pay rent. So you may see a lot of small mum and pop landlords start selling their properties. And so what I think is going to happen is late this year and early 2022, we're going to see a turn in the housing market. We're already seeing supply increase. And this is also the latest warning from the International Monetary Fund, the IMF. It says Fed likely needs to raise rates as soon as late 2022. So like I keep warning, these interest rate hike predictions keep coming closer and closer. And the biggest effect on the housing market or real estate, the thing that affects prices mostly is interest rates. Because for every 1% increase in interest rates, that means people's, can borrow 10, 15, maybe 20% less. And that directly affects real estate prices. Like I said, for every 1% increase in interest rates, house prices could fall anywhere between 5 and 10%. Just like we're seeing house prices balloon because interest rates have fallen by about 1 to 1.5%. It also says here, Fed's wallet joins support for targeting mortgage-backed security purchases in its taper. So along with increasing interest rates, if they taper their treasury purchases and mortgage-backed security purchases, even if they don't lift the federal funds rate, the bonds rates will increase, and a lot of mortgaging, a lot of interest rates go by what the 10-year US Treasury does. So if that increases from the Federal Reserve buying less treasuries, because what's keeping it down right now, people saying, oh, look, we'll look at the bond market, they don't see inflation, they don't see a price hike. Well, that's because the Federal Reserve has completely overtaken the bond market and they're artificially keeping interest rates lower. So everyone, let me just paint the picture of the situation we're in. We've got rampant inflation, unemployment benefits ending, no more stimulus checks, interest rates likely going higher in 2022, unemployment rising, more supply coming to the market from landlords selling, evictions, and foreclosures. Everything points to the US economy could enter into a double dip recession next year, and I think we will see a big shift in the housing market in 2022. So what does this mean for us, you and me, and how can we prepare? Well, I just want to be clear, I'm not saying go and sell your house now, the sky's falling, the end is near, and I'm not trying to tell you to, put off your purchase next year to try to time the market. All I'm trying to do is put out the warnings, let you know what is coming so you can do your own research and you can make a better educated purchase. I don't know the exact date or the exact month the bubble will burst. I don't know the exact percentage, but I do know we will have a shift in the housing market in 2022. I do know we are in for some tough times ahead. And I do know that this recovery, this has been a fake artificial recovery. They've covered all the problems again, just like in 2008, by printing money, by giving stimulus. But that means during the next crisis, they're not going to have the same ammunition to fight the problem that we're having right now. And there's a saying, it's better to be prepared a year too early than one day too late. So what we should do is get our finances in order, pay off high interest debt, have an emergency fund, because there may not be the government there to bail you out like they've just done. I don't think there'll be any more bailouts. The government's not going to be there to save you. And then once you've paid off your high interest debt, once you've got an emergency fund, you may want to be stashing some cash for the crash, so then you can go and buy those homes for a discount, or you can potentially get some stocks for a discount, because it's never a great idea to buy things when we're at euphoria and we're at the peak. So everyone, that's just my thought on the current housing market. You let me know what you think is going to happen to the housing market in 2022. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you update on the latest is happening in the housing market. And of course, if you're bored, I'll put up some other videos here. I'll see you all there.